Imagine a world in which automobiles are masterpieces rather than merely machinery, where electricity whispers along highways and artificial intelligence propels innovation. Ruler of the universe, Tesla is creating this kind of world. Although the corporation is currently leading the electric car market, its goals are much more expansive. Tesla is working on solar power systems, brain-computer interfacing, and potentially self-driving automobiles. We'll look at Tesla's untapped potential in this video. We'll talk about the company's future plans and cutting-edge technologies. We will also address the topic of whether Tesla has reached the limits of its enormous potential. So fasten your seatbelts and come along for the ride as we take you into the future of transportation. But not before you click the like and subscribe buttons. Greetings and welcome to Tesla Stock News. Let's watch this video. As you are all aware, Tesla is much more than just an automobile company. Despite what the media frequently claims, Tesla is not your typical automaker. Instead, imagine this for yourself. The innovators aren't simply putting automobiles together. They're orchestrating a creative symphony, handling over 80 of their components in-house, from the raw materials to the final assembly line. The catch is that instead of being simple passengers on the provider train, they have made camp in the lithium mines and are actively mining the element that powers their batteries. They are the conductors of quality and the composers of innovation at every note. Their energy fantasies gain a spark of independence from this self-sufficiency, which also lessens their dependency on outside sources. Design and manufacturing checks for batteries. Tesla creates batteries by bursting them into existence, not merely seeing them. This degree of control puts them in a league of their own in the world of electric vehicles. It does more than merely stop the bleeding. Consider range, energy density, and the fact that Tesla is setting the standard. Let's enter the autonomous lane now. Tesla is plunging headfirst into the AI pool rather than merely towing the water. They are the forerunners in robotics and the designers of fully autonomous vehicles. They envision a time when automobiles would drive and people will be relegated to the sidelines. So buckle up, because this is going to be shocking. Not only is Tesla a car and tech firm, but it's also a chip and magician. They have created a powerhouse with the AI microprocessor, which enhances their autonomous systems and cars. It's a thinking and learning machine, not just an automobile. Alright folks, let's go outside. E-garage. Tesla is thriving in the solar industry and isn't limited to four wheels. They are installing solar systems for residences and commercial buildings, painting the planet with a green that is viable right now. Now, let's discuss energy. Tesla harvests and stores extra energy, which they then jokingly sell back to the grid. It's like turning sunlight into money, turning sustainable energy into a cash cow, and charging no matter where you travel. Tesla has charging stations all around the world to take care of you. Not in Tesla's neighborhood, but still, they have a solution for your range concern related to electric dreams. But wait, there's more. Not only is Tesla a master of hardware, but they also masters of software. They are letting the world in on their autonomous secrets, licensing their complete self-driving software, and opening the gates. Anyone. Insurance? Tesla is creating coverage that is just as distinctive as their cars. Not only is it protective, but it feels a little hazy because it's a Tesla-tailored shield. Beyond the physical world and into the digital sphere, Tesla is also investigating cloud storage options. And let's not forget about this processing behemoth. With its fifth most powerful supercomputer in the world, Tesla is a digital whiz at building and overcoming challenging simulations. Oh, and welcome to the Tesla bot. Their robotics know-how goes much beyond the road, suggesting a time when Tesla's technology will be multifaceted. Tesla is the heavyweight champs of the electric vehicle industry, therefore they are by no means an underdog. With its tech-driven product selection, they will clearly be leading the way in 2023. Whether it is powered by gasoline, hybrid fuel, or electricity alone, the Tesla Model I has become the best car in the world. Just remember to keep your charging cords handy. The narrative of Tesla is far from over. For the next 5 years, prepare yourself for an incredible ride as technological advances completely change the automotive and energy sectors. Tesla's portfolio is a canvas of invention rather than a one-trick pony, a roadmap to a self-driving automobile future and a symphony of change. Energy is environmentally friendly, and innovation is boundless. Tesla Inc. is the subject of a close examination by Barron Partners Fund, which released its Q2 2023 investor letter recently. In its most recent investor letter, Barron Funds, an investment management firm, revealed some juicy details. Let's now discuss the performance of their fund and the true showstopper. They appear to be dancing to a new beat as they surpassed their benchmarks in the second quarter of 2023, achieving an astounding 15.54 return. To put that in perspective, the RT 500 index managed 8.74 and the Russell Midcap Growth Index managed just 6.23 during the same period. They were well behind, but there's still more. This fund is not a one-hit wonder. So far this year, it has demonstrated a remarkable 42.59 spike in returns, outpacing the indexes, which are now at 15.94 and 16.89, respectively. Look at their top 5 holdings to see their stellar picks for 2023. If you're wondering how they're managing their money so magically, let's now focus on the show's main attraction. With its headquarters located in the sun-drenched metropolis of Austin, Texas, Tesla Inc. is a tech titan that specializes in designing, developing, manufacturing, and marketing electric automobiles. They are not your typical automaker. Instead, they are all about the future. Not only that, but they're also dabbling in energy production and storage technology. Tesla Inc. was trading at $245.01 per share as of September 1st, 2023, but Tesla Inc. performed somewhat of a moonwalk in the last month, returning minus 2.55. Its shares had a little decline during the previous year, shedding 9.33% of their value. Don't let these anomalies on the radar fool you. With a staggering market capitalization of $777.659 billion, Tesla Inc. is still a major participant in the industry. Several variables impacted their most significant disruptive growth position's strong performance during this time. Although there has been a modest decline in margins relative to their peak performance, Tesla Inc.'s financial health is still strong and the business is seeing a big turnaround in investor mood. The issues that dogged Tesla in 2022 are now fading into the past. The behemoth electric vehicles appears to be doing well in the wake of recent events. Tesla's successful entry into the Chinese market, where deliveries are impressively rebounding, is one of the noteworthy developments. Production has increased at Tesla's most recent factory in Texas, and this growth is anticipated to have a favorable effect on domestic sales and profit margins. Along with these developments, American government laws have helped to lower the cost of Tesla automobiles for the general public and to lower the company's manufacture of batteries. More and more specialists and market professionals are of the opinion that Tesla has not even begun to explore its full potential. Among these changes, Tesla's strategic alliances with rival companies throughout the quarter are noteworthy. Early in June, Tesla accomplished a significant milestone when it consented to provide Ford Motors with access to its state-of-the-art network and electric vehicle charging technologies. General Motors, Rivian, and Volvo were among the other conventional automakers and manufacturers who joined the EV bandwagon. It is anticipated that this collaborative trend will keep demonstrating how much better Tesla's infrastructure and charging technology are than those of other industry standards. Consolidation around a single technology has the potential to hasten the installation of EV charging infrastructure, allay worries about obsolescence, and ease reluctance among potential EV purchasers. With an amazing 60% market dominance in the domestic EV segment, Tesla is leading the way as the adoption of electric vehicles reaches a tipping point globally. This highlights Tesla's leadership in the sector and places it as the main benefactor of the continuing transition to EVs. A rising number of investors are looking for businesses that are well positioned to use artificial intelligence in addition to AI. Investors soon realized that companies that could effectively incorporate AI may potentially benefit even more than those that first focused on software and semiconductor companies that enable AI. Since 2016, Tesla has led the way in implementing hardware for autonomous driving while still maintaining a high level of software development. AI technology is a major component of Tesla's autonomous driving system, which enables cars to sense their environment and make judgments instantly. By successfully fusing cutting-edge computer hardware with inferential software and proprietary AI training, Tesla has established itself as an industry leader. It is anticipated that Tesla would eventually sell other automakers its autonomous service under the Tesla Inside. While Tesla has clearly performed exceptionally well, other core growth companies had impressive growth throughout the quarter, and 2 other top 10 positions outperformed Tesla in terms of appreciation. One of the best performers over the last 3 months is CoStar Group Inc., which increased by an amazing 29.3%. CoStar's deliberate entry into the home data sector, where outcomes have beyond projections, is responsible for this upsurge. CoStar's monthly residential user base has surprisingly exceeded internal forecasts, and this accomplishment was made prior to the company increasing its marketing efforts. It's clear now that the residential opportunity is far bigger than first thought, and it can be explored for less money. Despite its impressiveness, this diversification plan has not been without its difficulties. Alongside legacy, although there was some softness in the commercial business, mostly as a result of macroeconomic factors, the company's ability to diversify its product offerings and possibly gain market dominance in a neighboring category has given the organization more stability and value in a market environment where a small number of companies and industries been driving performance, protecting against large portfolio declines. Most significantly, the financials and real irreplaceable asset categories, sector closely associated with overall economic conditions, had a disproportionate share of the portfolio's underperformers, both of which lagged behind the broader index's returns among the fund's bigger holdings alone. MSCI Inc. saw a drop of more than 15%, much like CoStar. MSCI is continually working to expand its range of commercial offerings. It continues to be the leading player in the index business. Is its strength. Despite having strong retention rates, this division is nonetheless vulnerable to cyclical changes in the economy. Recent fears about regional banking have resulted in longer sales cycles, cautious client spending, and a minor decline in retention, especially for smaller clients. Although there has been some slowdown in the growth of newer business lines, there is a general consensus that problems with both legacy products and newer divisions will pass quickly. Despite brief restrictions on client expenditure brought on by the banking crisis, MSCI's solutions have established themselves as the industry standard for performance risk. Significant product line movement from traditional banks to third-party asset managers is anticipated. Increased industry regulation, particularly with regard to private assets. With its vast data resources and clientele, MSCI is ideally positioned in this market to support these managers' solutions. One thing that will provide MSCI a competitive advantage is the difficult task of being able to access private corporate data. As was shown in the first quarter, the fund raised its investments in particular financial firms in response to stock price declines caused by macroeconomic worries. Among the notable additions made during the quarter were increases in positions in MSCI and Charles Schwab Corp. Additionally, the fund's database indicates that Tesla Inc. is currently ranked 28th out of the 30 most popular companies among hedge funds. At the end of the second quarter, 79 hedge fund portfolios owned Tesla Inc., a slight decline from the 82 funds that had held the stock the quarter before. The future of electric vehicles is bright, and Tesla is still pushing the boundaries of innovation and expansion for the EV sector. This concludes the video. As we draw to a close our conversation on Tesla, the ever-changing electric car scene, and AI integration, we'd love to know what you, our esteemed viewers, think about Tesla's place in the market. Do you think that the auto industry will undergo a revolutionary change as a result of Tesla's creative approach to AI integration? Would you like us to discuss any more stocks or subjects in upcoming episodes? Please share your thoughts and observations in the comment box. Do not forget to click the like button below if you thought today's content was interesting and educational. For additional updates on Tesla and the financial world, please think about subscribing to Tesla Stock News if you haven't already.